everyone, K Kim here. Today is May 19, 2017, Friday. Happy Friday, everyone. Thank you for tuning into the market update. Market did see some shakeout on Wednesday, and it rattled a lot of traders. And I think on last weekend, the last market update, if you remember, I talked about how I am open-minded for a pullback. I think I was talking about 230.60-ish. It did come to about 235.80. But that's what I was talking about, to back down to this 50 EMA. Remember this 50 EMA we've been talking about? We've been talking about this time for some time now, right? This is a modified 50 EMA setting at the low, and this is a modified 20 EMA setting at the setting at low. So that's the level where we found support here. It has a pretty impressive resume. Looking at the 50 EMA on this daily chart, we found support there, we found support here, and this is exactly where we found support. So that's a good level to watch. And with that recent support, we have also established this rising uptrend support. How do you know that it has been established? When you have a three touch, that's kind of a general rule, like overall, when it has a three touches with the bounce, that is a strong establishment of intermediate to primary term uptrend support. So yesterday, we wouldn't have known this was going to be a support until today that we saw a gap up and we're seeing the follow through, which is coinciding with that 50 EMA level and the prior resistance level, right? I'll tell you exactly why this happened, right? So obviously a lot of people are bearish below this downtrend resistance level. A lot of people are thinking that it's going to come down to 229, 228, even lower. A lot of people are calling for the crash. A lot of people are calling for even 180s. I know, stupid, but they were. Somebody somewhere was. And when we start gapping up like this, what do you think is happening? Well, a lot of these traders are starting to chase. This is a reason why you don't ever want to chase if you're not already, been positioning yourself here. I was positioning myself, which I've been talking about on my market update videos. So as this did start to move higher, I was holding through my positions. I'm still holding through, my indice long positions. And what happens is those people who didn't participate, was not able to participate, now they see that we have cleared this resistance. Now they see that we are above 20 MA, these key short-term moving averages. And so what happens is they start to buy it up here. Maybe they waited. Maybe they waited until it clears this resistance. So now what happens is they start to buy it up here, right? And then once it clears this resistance on a closing basis, if I go to closing base, you can see that we actually printed new all-time high on Spider, right? So what happens is they like, wow, this thing is gonna look a lot like February, right? After you start to make new all-time highs, we may have this kind of move. So a lot of these short-term traders, they start to add, start to accumulate, start to positioning themselves here in that vicinity for about 248.50. Again, because they missed out on this move. So what do? They start adding, they start accumulating, start positioning themselves to the upside. This is what kills the short-term trader. When markets start to not move and start to shake and bake or start to move sideways, like they consolidate, this is where they start to add and start to kind of look around, see what other setups they are, and they start to accumulate, start to position sizing, or start to accumulate positions for themselves to the long side. And the market knows this. And it flushes them. We get a big gap down. You see the tankage here. And then it gets back up. Right? So that's kind of what happens. A lot of people who are, trying to accumulate long positions, all of that's what happened. The gap down flushes all of them out. And then we see a move here. This looks like a bullish belt hold. I mean, if you just Google it, you can probably kind of see. And with that gap up today, right there, I think we're seeing that kind of a catalyst bullish move. But with that 20 MA, remember we talked about this 20, I have not changed this setting. If you go back to my market update, we've been talking about that 20 MA setting at the high, setting at high, and that 50 MA setting at low. Those are two modified EMAs. So that's the important level. As you can see, 50 MA acting as support, 20 MA acting as resistance. We are range bound, looking at a minor term. So as far as the sentiment turning back bullish in the minor term, we'll need to get back above 240.21. Okay, so 240.21, below that, expect volatility. Even if you're upon filling the gap, there might be a pullback. The way for it to continue higher would be, let's say, next week, if this thing starts to move up like this, and then we just gap it up. Then I think there's a good chance this thing just continues higher. If not, there will be some resistance once it hits that, if it fills that gap, and then there could be a pullback, and then some shenanigan sideways move before getting back up. I am still bullish long term. Again, not because I said it, because the chart telling me that we're still bullish. We're still in a bull market. We don't have a topping pattern, or we don't have a reversal pattern. We are seeing volatility. That's what market does. If you hate, sick and tired of these pullbacks, then you really don't understand the market. Well, as soon as you start signing up, start trading this market, that's what this market is. Market pulls back. Market sees shenanigan gap downs and gap ups, right? That's what it does. This is why this market, you're trying to forecast next day's move, next few days move. That's how this market will kill you, how you want to quit this game, how you get exasperated just waiting on things. But if you understand big picture, if you understand how to be more of a longer term trader, like I am, this kind of move will not be a move that is going to start rattling me or start to get in panicky mode or start freaking out. Objectively, I was looking at it just 2 days ago on the Wednesday. I did midweek update for my members, and you know what? I'm still bullish because we're still in the level where could potentially be a support. I don't know if that's a level is going to be support. This is a prior resistance. This is where 50 MA is residing. If you actually do a Fibonacci here, this low, this high, this is a 50% level, retracement level, while they're coinciding with this potential rising uptrend support. So let's see if that level holds. I don't know for sure, but if we do see hold, then there's a good positive sign. We did hold, we did see some buyers, and we gapped up today, and then we are seeing a little bit of follow through, but we talked about also that 20 MA has been acting as support in the recent past, though it's likely going to act as resistance here. So that's kind of what we're seeing, resistance on 20, support at 50, but structurally we're still in a bullish in the intermediate term with the minor term bearish sentiment. Does that make sense? So let's continue with the Russell 2000. I know Russell 2000 lost a lot of its ground. If I can pull my chart here, well, Russell 2000 is hiding from me for some odd reasons. Hold on a second. Alright, so we are back at it. Let me just make some changes here. Okay, so that's support. We still have this huge gap down, right? Okay, get rid of that. These gaps are deep. See, I wish those gaps were unfilled, but you know, the market is not gonna give me what I want. I am still holding full positions on Russell 2000. Oops. That's a gap fill resistance. Here's a few things that I like about it is, let's see. We have a support right there. That's the level we're holding. We're kind of in this rising channel, right? We're kind of in this rising channel here. Let's make these So we have this rising channel. This rising channel usually favors the buyers. You know, that's kind of how the market is gonna move. You know what I mean? You see how even here, kind of like, you know, sort of, not really, but see how these kind of a consolidation pattern, it actually favors the buyers. Make a move, we start to consolidate, maybe have a channeling action, and then we get some move. We get this consolidation, maybe a channeling action, and then it gets a move higher, right? So this is kind of a more of a consolidation, digestion, resting pattern after this kind of move. There's a correction through time, and there's a correction through price. So this is really, since really December really hasn't gone anywhere. That's what I call correction through time. It had a pretty strong move to the upside, so that's kind of what we're seeing here. So structurally though, we really, intermediate term structure on this chart here, we really haven't, it's not broken yet. The chart is still bullish in the intermediate term. Obviously in the minor term, I wanted to see this level holds here, the 50% retracement level, and then bounce up. We had a lot of move happening here and then continue higher. I think that's what I wanted to see. But again, that's not what happened. What happened was obviously that a lot of people, I think, were positioned themselves in that way, the bullish way. That what happened was, you see a lot of wicks here, a lot of dip buyers came in, and then this market, the small cap, just flushes everybody out. So, but in that process, we're back at the lows here, but we are providing and establishing these higher lows. So meaning there are still wind blowing to the upside, looking at primary to intermediate term. Again, in the minor term perspective, we need to get above these resistance here, 138.65. Again, this is a lot of resistance. We have this resistance, horizontal resistance. We have this 20 MA coming down. We got this falling resistance. So again, there could be another way that it just kind of gaps it up, like it did it here, where it comes up and, you know, it just kind of gaps up above these resistance. That's what I call jumping over the fence. It doesn't want to deal with the fence. That might be another scenario. It goes up here and just gap it and go. And I think if we see something like that, I think it can get back up to this resistance level quite rapidly. However, if we start to fizzle here, kind of get up, grind, I think there could be a lot of volatility. I'm even still open-minded to go up, maybe even come down, retest this low, and then go higher. I am still giving benefit of the doubt to the buyers on the Russell 2000, even with the recent move, and that's the reason why I'm still holding my call positions. And so what I want to see is getting back above 138.65 for this sentiment to change quickly. But with the recent gap down move, things are hectic here for the bears, but I don't look at this as a bearish chart. It is bearish sentiment in the minor term though, but looking at an overall perspective, we're seeing a bullish sentiment there. Let me just kind of redo my chart here. Let me just do that. I think 23.98, 24 is still the major level to overcome before this thing flies. I'm still calling it a bluff, this head and shoulder formation. Right? So this is what everybody's looking at, and I did many demonstrations where even on the financial sector there could be these head and shoulder formations. There's a formation needs to be confirmed. If it doesn't, it just, you know, scares everybody out before it, you know, makes huge bullish movement. And that's kind of what I'm thinking is going to happen in the financial sector here. If it does get above 24, that's the level it's going to start to fly. But again, it's not going to be like pretty. It could get up and then fakes a lot of people out and then go higher. But either way, primary term perspective, we're still in a bullish stance. So, you know, a lot of people look at this and, well, okay, you made this move. We have a topping pattern. This thing is ready to come down 20, 36. How many times you hear that? And that is a logical sense. I mean, I wish market do stuff like that. I really do. I really, really wish the market would do stuff like that. We get up. We have a all pretty, perfect, symmetrical textbook head and shoulder formation, come down, I short it right there, and I write it down, come back to perfect support around 1920, and then I cover my short, start going long, and then get back up, and then do it again and again. It makes everybody happy, makes it logical, everybody makes money, everybody's doing great. But you know what? The market doesn't do stuff like that. I mean, it's the same thing here. I mean, you know what? I'm like preaching to the choir, right? I mean, doesn't this look similar, right? We got up here, we had this huge move, we start throwing this head and shoulder formation, left shoulder head, right shoulder, neckline there. What happened was actually briefly broke neckline right there, right? You see the neckline right there, it broke the neckline, we got left shoulder head, right shoulder, we had a good move. You know what, it's logical. It's so logical to come back and retest this to about 14 here. So it makes sense to short there, wait till to 14, cover it, buy some puts maybe in around here in that vicinity, write it down to about 14, maybe even 13, and then buy it back up, and then this going. It's just very, very happy scenario because market goes up, come down, very logical. But at some point, what's going to happen is this thing really gets steamed to the upside, start to throw head and shoulder formation, and then boom, just gets back up. That's kind of what I think is going to happen, which I think, it has a high probability of playing out in this scenario. I think that's what everybody likes to see. I mean, I want to see it. I wish that's what happens all the time in the market, where it's just so logical. We get topping panel, come down, buy it. But I am not leaning towards that scenario. I'm leaning more towards the scenario where that this fakes a lot of people out before getting back up, because a lot of people looking at this and they say there's no way I'm going to long here. And that's exactly what people said back in 2013, 14 on the equities, on the spider low. There's no way I'm going to go long there. It went higher, 14, 15. Now when it comes to 15, 16, everybody's calling for a crash. There's no way it's going to go any higher. And then here we are in May, and spider is making the all-time high just a few days ago, right? Let's go to silver, and I end the video today. Silver, still, I don't want to talk too much about this. Is a primary downtrend resistance. We are finding resistance there. Looked like some kind of a inverted head and shoulder that really didn't play out. I don't even know what. Let me just. So. It's messy. I mean, I don't know why people are so interested in gold and silver here. There are times a lot of people did make a lot of money trading silver, and they're still looking to make big bucks, but it's not ready. It needs to get above 1942. It's not ready. It's not ready. GLD, same thing. It's not ready. We're still bound by this long-term downtrend resistance right there. We have some kind of support right there. Let me draw that in. Maybe that's give buyers some hope. But I wouldn't be interested until this thing get above 124.67 here. Still bound by this downtrend resistance. Let's see. Long term, like a month. I'm looking at my monthly chart. It's not bad. There's a chance. There's a chance on gold actually. I'm looking at monthly chart here. Let's see if we can get above it really needs to get back. If it does get above 124.54, I might think about going long. And when I say long, I don't mean to hold a couple weeks. I don't mean to hold just a month. I'm thinking 3 to 6 months at a time, maybe even longer, right? Let's look at GDX, and I'll call it a day. GDX, yeah, so long-term downtrend resistance, that comes from all the way from the top. Monthly chart doesn't look too bad. I'm just looking at my screen. You're not seeing it on your video, but I'm looking at my other screens. It look potentially be this ugly looking inverted head and shoulders if we start to see confirmation. I'm going to tell you right now, why trying to pick bottom at this point when you can actually still go long around 40 as it makes go to about 80, right? Why are you trying to, pick bottom, get slaughtered here? Wait for a full confirmation. And I'll look at these, and I'll let you guys know when I think there's full confirmation. Maybe I'll write an article or do a video, but right now is not the time. Have a wonderful weekend. Good luck trading next week.